Ladies and gentlemen, good day and welcome to the Kirloskar Pneumatic Company Limited Q1FY22 results earnings call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dhirendra Tiwari from Antique Stock Broking Limited. Thank you and over to you, sir.
Thank you very much. Good afternoon, ladies and gentlemen. On behalf of Antique Stock Broking, we welcome you to 1QFY22 post-result conference call of Kirloskar Pneumatic Company. I'm glad to have with us today Mr. K. Srinivasan, Managing Director, and Mr. Suhas Kolatkar, CFO of the company. Now, I'd request Mr. Srinivasan to present his initial remarks, following which we can begin Q&A. Mr. Srinivasan, sir, over to you.
Yeah. So, thank you, Dhirendra Bhai, and good evening to all of you. Let me at the outset request our company secretary, Mr. Jitendra Shah, to read out the cautionary note.
Thank you, sir. Good evening to everyone. The discussion on the financial results and the presentation uploaded on the website during the earnings call may contain statements relating to future business development and economic performance that could constitute forward-looking statements. While these forward-looking statements represent the company's judgments and future expectations, a number of factors could cause actual developments and results to differ materially from expectations. The company undertakes no obligation to publicly revise any forward-looking statements to reflect future events or circumstances. Further, investors are requested to exercise their own judgments in assessing various risks associated with the company and also the effectiveness of the measures being taken by the company in tackling them as indicated during the discussions. Thank you.
Thank you, Jitendra. And once again, good evening to all of you. Let me at the outset wish you all good health. I hope all of you are doubly vaccinated and staying doubly safe. I know a lot of, we have all gone through difficult times, but I think it's good to be safe. From the company's point of view, Q1 was a real challenge. We had over 150 of our employees and associates getting infected and they recovered, except 3 of them who succumbed to the pandemic. All others were fine. There was a near collapse in the supply chain with all the fabrication was stopped on account of ban on the use of oxygen for industrial purpose. This affected the company and its vendors significantly. Yet in all these adversities, the company did reasonably well in harnessing its resources to meet the critical requirement of oxygen compressors. We worked closely with DRDO and other government bodies to standardize the PSA package for distributed oxygen generation at various hospital sites. Our plug-and-play, ready-to-use compressor packages made it easy for installing and to use in remote locations by relatively untrained technicians. We supplied over 150 compressors in the first quarter for air separation plants for making oxygen from the PSA route. We also have since supplied over 200 of them in July. So this has been an ongoing effort and this will continue right through Q2 and beyond as the demand is still very strong and coming in not only from India and from overseas customers as well. In all this, the investment that we had made for having an in-house design capability, which we have been working for some time with City University, and for the manufacture of screws, made it possible for us to dramatically scale up and customize this solution to meet the urgent requirements that came up. In the gas and the refrigeration space, our order inflow was reasonably strong. However, because of challenges with inspection as well as to ship it to places where the site work was not ready, quite a few of these packages were delayed. We expect most of them could get shipped out in Q2 and Q3. The sales for the quarter was 169 crore as compared to 80 crore of the previous year. Considering that Q1 in both years was a challenge, and a challenge of very different kind. Q1 of the previous year, we had a lockdown, but the infection within the factory was minimal. We hardly had about 7 cases. Whereas Q1 of this year, the infections were a record high, but there was not a complete lockdown. So we had a very different kind of challenges in both the years. Yet in all this, the company did reasonably well to deliver a good performance, particularly in the air compressor product line of the compression segment. As we had indicated in the earlier calls, the transmission segment was largely refocused to meet in-house demand of gears for the compressors, both for the centrifugal, for which we started doing the high-speed gearboxes, as well as the new burgeoning screw compressors, which have been taking off tremendously in Q1 and hopefully going through to Q2 and beyond. However, we continue to take orders for the high-speed gearboxes, which we have specialized, particularly up to 50 megawatt power generation. And this business we will continue to do. Since the total business in this segment is below 5%, we will no longer treat this as a reporting segment. The road railer business was nearly in a shutdown condition for the first 2.5 months, primarily because Delhi was seriously impacted with the pandemic. Though we did have sufficient loads coming in from Chennai, we couldn't run empty rails back, so we had to curtail services for the first 2.5 months. As we speak, July was a bit of a comeback, a strong comeback at that. More importantly, the railways have put out a draft policy for intermodal transport that bodes well for this business as it seeks to create a new and more efficient category of seamless, long-distance, end-to-end haulage of goods. We expect this intermodal transport opening up will be a great opportunity for all logistic players, particularly in the current scenario where fuel prices are gone up tremendously. Our company expects that we will come back strongly in the remaining part of the year, and we will see a strong revival of demand for intermodal transport. The order bank remains very strong, over 1,000 crore on 1st of August compared to 868 crores that we had in the previous year. The company's capex plan is also on track. We have not held back on this. We have committed up to 20 crores of the 50 crores that we have committed for the year. We had good working capital management, and my colleague Suhas will tell you the details of it. But suffice this to point out that we had a free cash generation of 54 crores in the first quarter, which means the quality of business was very good. Now let me quickly touch about the key product lines in our compression business. One first thing I would like to call out is that KPCL historically is a project-based company with significant part of our sales coming from projects. Product sales are a lower category generally, but that flipped around in the first quarter. The air compressor business, with its fully established screw compressors with in-house design screws and made in Hadapsar, meant that our screw business took off significantly during this quarter. We now have probably the best-in-class design and a best-in-class product out there in the market, which is suitable ideally for the various Indian requirements. Our package screws with a dryer, oil separator, and an onboard IoT has made it the preferred choice for oxygen PSA plants across the country. This business is scaling up, and the demand is going up not only from the domestic market but also from our overseas customers. The reciprocating compressor business also continues to perform well. This is our forte as a KPCL company, and there is a strong demand coming in from both air separation plants for oxygen as well as from steel plants. A notable development during the quarter was the development and delivery of a compressor system for the methanol to coal project. This again is a Niti Aayog sponsored project and likely to scale up over the period of the next couple of quarters. The refrigeration compressor and systems business had a fairly muted quarter. The product lines were good, but however the projects were not taken up since the site work was not ready in the various geographies. As you're aware, project business is a significant part of this space. We expect to complete most of these projects during Q3 and Q4. The cold chain ice plant compressor sales picked up, and we also see certain local moves to use some of these cold chain plants for vaccine storage. So we expect this to pick up strongly going forward. The requirement of vapor absorption chillers also grew, with the pharma companies doing well. There is a strong order inflow, and we had higher than normal sales in the first quarter, but there is a significant order inflow for Q2 and Q3. Export, however, remained muted. The inquiries were still strong. We are yet to finalize some of the major inquiries during Q1, but as we speak, we are seeing more projects getting finalized during Q2, Q3, and hopefully execution will come up during Q4 and in the next year. Process gas compression systems. The demand for CNG compressors has been increasing, with the city gas distribution companies scaling up their installation plans. However, the commissioning of these CNG packages were all delayed during the first quarter as sites were not ready and installations were postponed to Q2 and Q3. We still believe that this business will see new highs from the second quarter onwards. As can be expected from our company, we operated all the installed and commissioned CNG packages 24/7 right through the second wave, and with our teams across the 15 states. This is our deliverable that we are proud of, and this is our forte. Like refrigeration projects, work in progress for building packages for gas systems also were delayed due to site work not being ready, and we hope that the third and fourth quarter will have significant sales happening in these projects as well. As we mentioned, we have a significant order book, and these projects will definitely be completed in the Q3, Q4. Now a quick look at the outlook for Q2 and beyond. The strong order book, and with several projects coming on stream, hopefully we will meet both the top and bottom line expectations in Q2 and beyond. We still remain very bullish of doing our numbers for the whole year. We will update the position during the course of the next quarter. On a longer term basis, we remain committed to our aspirational target of being a 2,000 crore plus company in the next 3 years. Now I would request Suhas Kolhatkar, the CFO, to take you through the financials. Thank you, Vandan. Yes, Suhas.
Thank you. Good evening, ladies and gentlemen. I'm sure your relatives and colleagues are taking adequate care to ensure good health in this period of pandemic. Most of you either must have completed or on the verge of completion both doses of vaccination to get sufficient protection from the effect of this pandemic. Coming to the company's results, I'm sure by now you must have gone through the results which we posted on the BSE website after yesterday's board meeting, and also the presentation that we have uploaded on the company's website. However, for the benefit of those who probably did not get a chance to have a look at those results, let me now quickly summarize the Q1 financial performance. Apart from the sales of other usual products, supply of screw and reciprocating compressors for generation of oxygen to treat the COVID-19 affected patients contributed to the top line growth in Q1. This trend will continue, as Srinivasan said, in the Q2 and beyond. While figures of the corresponding quarter of the previous year are not directly comparable, results achieved during the current quarter despite constraints of supply chain disruption and affected workforce are noteworthy. Having tracked and analyzed the company's performance during the earlier years, most of you are also familiar that the company's quarter-on-quarter performance gets influenced by the mix of products and projects. Most of the projects do get executed in the third and fourth quarter of any fiscal, and as such, comparison of results with the previous quarter may not be an appropriate on each front. On this background, I would like to present the Q1 results of the current fiscal. As Mr. Srinivasan said, top line registered a growth of over 100% as sales for the quarter rose to 169 crores compared to rupees 80 crores in the corresponding quarter of the previous year. Material cost was 52% as the product mix was significantly different than the previous year. However, we believe that this represents a healthy ratio for the engineering industry. During the quarter, the company rewarded its employees who showed exemplary support during the previous year affected by pandemic. Increments and promotions were given to all deserving employees. As a result, employee costs rose to 32 crores compared to 27 crores of the previous year. You would recall that the company had availed a loan of rupees 40 crores in the last quarter of the previous year as an abundant precaution to take care of any financial need just in case it arises due to COVID-19 disruptions. Finance cost therefore is higher at 69 lakhs compared to rupees 13 lakhs of the previous year. We will take appropriate decision to either repay or continue with the said borrowing after Q2 results, considering the money market situation and the financial needs for the second half of the current fiscal. At this juncture, I would like to state that company has a net cash position of over 220 crores as on 1st of July 2021. Depreciation is in line with the previous year and additions to assets. As MD has briefed you that we have plans for capex for the current year of about 50 crores and particularly to support our growth, and over rupees 20 crores have been committed so far in this connection. Consequently, there will be some impact on depreciation in the coming quarters depending upon the capitalization. Other expenses are, as you are all aware, mix of fixed and variable costs and are quite comparable with the trends of the previous years. They stood at 19% compared to 18% of fiscal year 21, full fiscal year 21. There is no significant variation in the level of expenditure, and the cost controls exercised by the company in the previous year continue in the current year as well. As a result, EBITDA improved to 11.6% in quarter one compared to just 1.9% of quarter one of previous year. With the top line growth coming in the subsequent quarters by execution of the projects, we believe that the annual EBITDA will further improve. At this stage, I would also like to just put it on record that if you analyze our EBITDA trends of the quarter one of the earlier years, there has been a significant improvement in the EBITDA to 11.5% compared to about 6.3% in FY20 because it was barely 1.8% in FY21 and 4.7% of FY19. PBT improved. PBT was at 5.7% of sales, which showed a significant swing from the previous year, recording 18 crores growth over the corresponding quarter of the previous year. PAT as a result was at 4.1%, also showed a growth of about 12.5% over the previous year. It was just 1.5% in FY19 and 1.9% in FY20. Company issued about 79,500 equity shares, to be precise, 79,500 equity shares during the quarter under its employee stock options program. Consequently, paid-up share capital increased to 12.87 crores compared to 12.85 crores at the beginning of the year. Non-annualized DPS improved to rupees 1.1 per 2 rupee paid-up share, which is 55%, compared to a loss of 88 paisa per share of the corresponding quarter of the previous year. In terms of investments, company's non-current investments resulted in net unrealized gain of rupees 21.4 crores, and that gets represented in OCI. With over 95% of the revenue coming from the compression segment, this remains the only reportable segment. Previous year's figures have been regrouped wherever necessary to correspond to this reporting. The segment earned a profit of 15.16% or 15.2% for the quarter as compared to full year of about 17.8, 17.9%. To support execution of a strong order board, company has built adequate inventory considering its execution schedule. Despite this of a strong inventory level, Our supplies outstanding has been brought down significantly to 117 crores compared to about 157 crores. This represents just 74 days outstanding vis-a-vis 102 days outstanding. So we have been supporting to our suppliers both in MSMEs and other sectors while we are building our resources for the growth in the future. This was possible through a receivable management which has been working satisfactory with a reduction of over 100 crores in the first quarter alone. Receivables have been brought down to just 82 days compared to about 135 days. With new order bookings during the quarter, the flow of the advances has also been improving. As a result, the net working capital was reduced by over 40 crores and the cash reserves improved by about 54 crores in the first quarter. Capital employed in the compression segment has also been reduced by almost 45 crores compared to the opening level that we had at the beginning of the year. During this quarter, about 45% business, which you all want to always know what is a product sale and a project sale. So about 45% business was from projects as against average 60%, which has been the trend in earlier years. Post approval of dividend by the shareholders in the AGM held on 20th July, company has paid the dividend on 3rd of August 21 to all eligible shareholders as on record date. While these are these results which shows much improved trend than the previous year, a cautionary statement that I would like to put in here, that with more product sales in the first quarter, company could pass on the impact of commodity price increase to the market. It may or may not be possible to do so during the coming quarters as the sales from projects will pick up, which are generally at a fixed price. This may see some impact on margins in the coming quarters. However, we are committed to ensure that our overall margins for the year are very much in line of expectations of our stakeholders. So this was a brief on the company's performance from my side. We will be happy to answer any questions on the quarter one results.
Thank you very much.
Thank you.
We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bhagesh Kagalkar from HDFC Mutual Fund. Please go ahead.
Thanks for the extensive brief in the initial opening remarks itself, sir. So two things here. One is you're saying that the order book outlook looks strong, and the second is the target of 2,000 crores revenues in the next 3 years, eventually. So can you quantify the order book and which areas you feel the order book will be very strong for next 18 to 24 months now? Because you have to go toward 2,000 crores targets now.
We mentioned that we have an order bank of over 1,000 crore as of 1st of August. And broadly, the split that we've always been saying is that roughly about 45% out of that is from the gas business. Roughly about 20 to 25% of it is coming from the air compression business, and the same is coming from the refrigeration business.
Yeah.
Today, we have left out the TRM or the transmission and the road rail all combined below 5%. So roughly, this is the split that we will see. 45, about 25 in the other two.
And coming to the railroader business. Hello?
Yes, please. Go ahead.
Coming to the railroad business, okay, we have just one or two rakes operating essentially. So anyway, now you have started reporting only one segment. The transmission business is so small along with the railroad. So what is the feature of the railroader business now? If you take 3 years view, 2,000 crores revenue target, where does it fit in terms of revenues then in this 2,000 crores?
I think we shared quite openly in the annual report as well as in the last call. The rail roller business today, we are carrying the cross alone. We are the only people using this intermodal transport as a means of a technology demonstrator for the Indian Railway and for the logistic companies to see this as a means of efficient and intermodal transport of valuable goods. Our longer term interest is to be the road railer manufacturer, not to run the transport as a complete business. This is work in progress. We would have to transition it as more and more players come in to take on this intermodal transport as a means of conveying long-term haulage.
So in that context, what are the kind of initial inquiries that you are witnessing in the rail roller, because you want to manufacture and sell it, essentially?
See, today we are the only one making and running it. We run roughly about 135 road railers between the two ends, between Chennai and Delhi. That's the number of railers we run. They're formed into trains and moved up and down. In a good year, we will run about 1,800 of them up and down. That is in terms of road railer itself. Now we'll have to see how this develops. Unless we have more people taking it up, railways opens up more routes. This is now a proof of concept kind of a job. The railers are efficient. They're running up and down. Today we have an unusual condition where some high-end, high-value customers who are bringing in products into Chennai are even paying for the empty rakes to come back from Delhi because this is valuable to them. These goods are very inefficient if they are transported by road. One is because of safety considerations in terms of theft, pilferage, etc. So this is a very proven and valuable intermodal transport. We have to have the patience to see through this next phase.
Okay. Thanks, sir. That's all from my side.
Thanks, Bhagesh.
Thank you. We would like to remind participants that you may press star 1 to ask a question. Participants, to ask a question, you may press star and 1 now. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yes, sir. Congratulations for a good set of numbers. So my first question is this compressors for oxygen. What kind of business you will do this year? And I'm guessing that it's largely a one-off business which is flowing this year. So if you could quantify most likely what you're going to do. My second question is, we are at about 1,000 crore of backlog. I think we were running at about 700-800 crore of backlog last year, and for many years before that, let's say for past 2-3 years. So is it fair to assume that you will easily surpass 1,000 crore out of revenue in the current fiscal year? And my third question is, on the gas compressor side, what is the size of business today for us, and what is expected for, let's say, next couple of years?
Yeah. So first, let me take your first question in terms of oxygen compressors. I would put it like this: the distributed generation of oxygen at hospitals through PSA plants is a process that is there to stay. Our general feeling is that this is not something that's going to go away with the pandemic. This would become an operating minimum requirement for hospitals going forward. And this is not just in India, it is becoming something prevalent even outside India. So I would urge you to look at a couple of YouTube things on Oxygen Challenge on this subject. This is something what we believe would be something similar to what we have as standby generators in most commercial establishments, offices, etc. They don't run 24 hours, but when the power goes off, you need it to run. Same is going to be true with the PSA oxygen generators. So we are talking of this is in some form would stay on and grow initially, but stay on at a particular level on an ongoing basis. Having said it, we have specialized and packaged it well that we participate with the PSA package builders. And so we really believe that this is a business which will dramatically scale up but stay at a particular level on an ongoing basis even beyond. So that's the way we are looking at it. I don't want to give you the exact number of compressors that we are putting out in this year. As of now, we have a huge quantity of this to do, and we hope to deliver as many as possible. I will only briefly say that we are a very high market share player on the larger capacity packages, where we are talking of 100 bed and beyond. We have a leadership position. In the smaller ones, there are smaller players as well. So short answer for the oxygen compressor business is there would be a rapid scale-up and then an ongoing business beyond that. It's not going away. The second question you mentioned, sorry.
So just before that, I was actually not looking at the quantity volume to be sold, but will it be a 150-200 crore business type size?
If you're looking at the opportunity, it is much bigger than that. Our share would be in the range of what you mentioned.
Okay.
Now, the second question you asked is in terms of revenue prediction. Our objective of what you mentioned of 1,000 crores is out there, and we hope to do that.
And my last question, the third question
is on the gas compression business and its share. You see, we said it in the beginning and we said it before that our gas compression business is the mother business of the company, where we have a dominant position in the market because we have a unique advantage of completely doing everything ourselves. We do our API compliant reciprocating compressors, we do the packaging, we do the installation, we do the service, and we do the ongoing upkeep and maintenance work at the site as well. And this is at the CNG package level. We are also a fairly strong player at the midstream and the upstream packages as well. Here we offer it with the aerial recip compressors. So we are very dominant in this space. This is about 40 to 45% of our total turnover, and it will continue to be at that level or even get stronger. So this is not going down with all the new city gas distribution lines being auctioned and taken up. This will only grow further. That's as far as the gas compression business is concerned. There is one space that we didn't mention so far, but we have been working strongly on it, and that is the booster compressor for the daughter stations. We hope that we will also be able to come up with something on this going forward.
Actually, my question was on CNG within that. So I wanted to know the size of the CNG business and what is the scale, because bulk of your growth within gas compression is going to come from CNG.
See, size of the CNG business, if you look at, you can very well predict from the 9th and 10th rounds of GA allocation by which has happened for city gas distribution. So if you look at the 9th and 10th rounds have given something close to 8,000 compressors requirements, both in terms of main mother stations as well as the daughter booster station, what Mr. Srinivasan just now indicated, so where we do not have a presence as of now. So as a combination, and we will be working for such types of opportunities as well. As a combination, about 8,000 compressors, which would mean a 50-50% between mother stations and daughter booster stations would add something like 6,000 crores of revenue opportunity during the next 7 to 8 years, because the number of compressors that the government expects the city gas distribution companies to deliver are indicated in that results of the 9th and 10th round. And because of the pandemic, 11th round has still not come up, which would also see some future demands. You would also find that about 70-75% of the area has been covered with the 10th round of city gas distribution. So if you go to PNGRB website, you will find this.
Sir, I have the math. I just wanted to know what is the size of that business that you have today.
I'm indicated to you about 6,000 crores. That's the opportunity.
How much? Okay, I'll take that separately, sir. Lastly, sir, as the revenue scales up and there is a fair bit of cost management that we see, the current assets, what kind of revenue potential those have and on the max side? And does it mean that margins from what we are reporting today with the revenue scale up have a substantial scope for improvement?
Yes, it will, because you'll have to look at it that this is not a very capital-intensive business. We had demonstrated during the last quarter of last year that we could do about 400 crore of sale in a quarter, which really said that the current installed capacity potentially could give us anywhere between 1,200 to 1,600 crore of sales depending on the product mix. And we are making further investments to get this capacity up. So this is not a very capital-intensive business. It's more of a capability-intensive thing. We have been going ahead and making additional investments, and that would not be a constraint for achieving these numbers.
Okay. Thank you very much, and all the best.
Thank you so much.
Thank you. Ladies and gentlemen, please limit your questions to 2 per participant. Should you have a follow-up question, would request you to rejoin the queue. The next question is from the line of Abhishek Jain from Arihant Capital. Please go ahead.
So thank you for taking my question. Sir, we are talking about 2,000 crore opportunity. What kind of margins we are going to see at that level, if you can throw some light on the same right now?
Yeah, Abhishek, this is a very tricky question and future-looking statement which I can't make it. But if you look at our EBITDA margins of the past, we have been able to get close to about 15 to 16%, and the compression segment has been recording about 18 to 19%. So surely, as the turnover goes up, the margins will improve because the fixed cost will get amortized over a larger portion of the sales. So surely our margins will improve as the turnover goes.
And what will be the capex number for next 2 years, sir?
We estimate roughly in the same range, about 30 to 40 crores going forward.
Per annum?
Yeah, more or less.
Thank you, sir.
Thank you. The next question is from the line of Anmol Grover from Albatross Capital. Please go ahead.
Good evening, everyone. Thank you for the opportunity. So my question is that on the export opportunity, so where does it fit in your 2,000 crore vision statement that you gave? That's my first question.
Can you repeat, please? It was not audible. You were not audible.
Am I audible to you now? Hello? Just give me a second.
There is a slight disturbance coming from your background, so request you to move to a better reception area.
Hello, is it better now?
Yes, please. Go ahead.
Okay. So my question is on the export opportunity. So where does it fit in your 2,000 crore vision statement that you gave? That is my first question.
Yeah. Export will be an important part of our growth. We have taken a target to first take it up to at least 10%. You must look at this industry largely out of India has been exporting products, and that is on a price position. We are more of a project exporter. Consequently, the initial break-in into a market and to establish what we call as a proven track record becomes hugely important. So it will be an S-curve. You will see a lot of effort, small orders we had last year roughly an export of about 50 crore. This year we should probably do significantly more than that, and going forward it will scale up faster. So our export would be driven by project export, which means product plus application plus establishment and upkeep and maintenance. So it's going to be a little more different compared to what others have been doing in this space. And to that extent, it will be an S-curve.
Okay. And my second question is on the order book. So I know you already gave some light on the margin profile, but I was hoping if you could anyway quantify the current margin profile of the order book.
We already said that our order bank as of 1st of August is over 1,000 crore, and it continues to be that even as we talk to you today. we should take a weighted average EBITDA margin because it's a competitive business and it's in our interest to see that we talk of a overall margin rather than a specific product group wise margins.
Okay, all right. That's all from my side. Thank you.
Thank you. The next question is from the line of Kunal Seth from Batliwala and Karani Securities. Please go ahead.
Yes, sir. Good evening, and thank you for the opportunity, sir. So my question is pertaining to some of the new product introductions that we were working on, especially on the screw compressor side. If you can give us some update on, how are they coming along and what are the, client feedbacks on the same?
Yeah, the first screw compressor is out there and scaled up dramatically. That's what is driving the oxygen compressor business. And clearly, it's a best-in-class product. Now we are having a couple of more of them coming out in different areas, largely for water well drilling, mining, and a whole lot of new areas that's coming out. And a lot of them have passed the alpha testing, internal testing, and now we are trying to scale them up. So there are a couple of other businesses in screw, which is really on the refrigeration space, which will be in between our current recips and the Howden compressors, which we offer for the large packages. This also should be hopefully out by the last quarter. Again, that's a big opportunity out there for the food processing, pharma, and others. So quite a few new products are hitting the market. So you will hear about them and you will see them reflecting on the numbers as well.
And sir, with this suite of new products that will hit the market, will we still have any white spaces, or with this we will have covered most of the market?
There are quite a few white spaces. Like we mentioned earlier, the daughter station hydro boosters are something that will have to come to the market hopefully by the last quarter or the first quarter of next year. That's a big white space out there. That's 4,000 compressors in the next 8 years for the Indian market alone. Then, of course, there are a lot of new things that will develop. I mean, we have to look at the diaphragm compressors that could come up for the hydrogen compression requirements. So we are working on development of a biogas compressor for the dirty gas for the first compression. So there are a lot of activity happening. As the economy moves from solid to liquid to gaseous fuel in many ways, be it from natural gas or biogas or hydrogen, compression as a means of energy transportation storage will become more and more important. This is a valuable space to be in. And we saw the benefit of it or the lack of having it when we had this big oxygen crisis that hit us all the last quarter. So we are in a very gas-based economy, as I would call it. So we have to get more comfortable handling different technologies and different things as they develop.
And sir, this daughter compressor for these daughter stations, so I am assuming that we have the technology, and so basically it will not be, it is just getting those products to the market, right? Technologically, we are well equipped to handle that.
Yes. The basic technologies are available, but see, in any of these products, we have to be competitive in an environment that we operate. If you look at the CNG packages of a smaller size of 1 crore plus a package, we are talking here of 40 lakhs plus. These are much more competitive, smaller ones. It needs certain amount of value engineering and putting together that has to be done to occupy this space. We are working on it, and we hope to have a competitive product out there soon.
Sure. Sir, and my last question is pertaining to the CNG compressors that we have. Who are our key competitors in those markets, sir? And is it a very competitive market, or we have a large market share there?
Every market is a competitive market. The CNG packages today are largely, it's largely almost 80% plus. It's a bipolar market between us and another friend of ours in Pune. But there are always smaller players out of Delhi and other places. So the more the merrier. I mean, we compete based on our deliverable. We compete based on our reliability of product and the overall system support that we provide, not only at the time of installation commissioning, but also on an upkeep and an ongoing basis to man them, run them throughout
24/7.
Sure, sir. Thank you so much, and best of luck for the future quarters, sir.
Thank you, Kunal.
Thank you. The next question is from the line of Nikhil from Simple. Please go ahead.
Yeah, hi. Good evening. Am I audible?
Yes, please. It's wonderful. Thanks.
Yeah, thanks a lot, sir. And congrats on a good set of numbers. Sir, my question is, as we talked a lot on the CNG part and it's a big opportunity, I just want to understand what is the replacement kind of a business which you see, because once this 6,000 crore of market opportunity over 7-8 years, do you see that it can sustain at 100-150 crores as a regular run rate in future as replacement, or just if you can help me understand how the replacement market would be for these products?
Yeah, it should. I mean, any product has its life, and as the 8-year cycle will be completed, there will be a replacement market available, because there are first 8 rounds of GA distribution which has happened, and that have also supplied the compressors which will come for replacements. And as they come for replacement, the current cycle will also come for replacement.
Okay, so on a regular basis, post this capex, would you say that this will be a sustainable like 400-500 crore kind of a marketing with the replacement and all? Because a large part of capex driven market would be out of the market. So that's where I'm trying to understand.
We believe so. That could be a business opportunity.
Okay.
You must look at it in two parts. See, today we are talking of gas being about 6% of our energy basket and is expected to go to about 15%. Yeah. There is also an objective now that 15% of the natural gas must be replaced or added on by biogas. Now, the second stage of the biogas pumping also needs the CNG packaging. So this is an evolving business. Like I said, overall, as we go more and more towards a gasified energy basket, you will have opportunities of different kinds coming in. The compressor package may have to change and get better engineered or different, but the opportunities will continue to grow there. By the time we finish natural gas, have biogas coming in, and then we're looking hopefully at the hydrogen business as well going forward. So there is going to be opportunity. There is going to be a combination of new capex. There is going to be a combination of replacement. There is going to be a combination of upkeep and service support for all this, which is something like an annuity business, which also helps tremendously to keep the business running.
Okay. Secondly, sir, on the booster segment, just to the previous participant, you mentioned that that's a very competitive market and the size is pretty small. And in our earlier discussion, we were not quite participating in the booster market. Would you say that the margin profile of the booster segment would be dilutive to the overall company margin, or do you think that segment can also provide similar margin profile as the mother station market?
See, like we said in the beginning, this is going to be a more competitive, low-margin business. But like everything else, it's a bottom end of the pyramid. For us to not be present there was a choice that we said in the early days, but we think it makes sense to be present there as well, because that actually allows other competitors to occupy this space and then nibble at us at the regular business as well. So we will occupy this place. It will be a lower margin business, but it is still a business that we have to be in. Increment.
Okay. Sir, one more question. It's basically from our annual report. So in our annual report, we've mentioned that the air compressor market, we believe the company is looking to scale up in this business, but considering that product installation and the timeline which has spent with the installation plays a big role in terms of the customer accepting the product. Do you sense that we can get a faster scale up here, or would you say that the scale up would be more gradual? Just to understand that how we should understand the scale up in this part of the business.
The air compressor business has shown the fastest growth in the first quarter. And we expect that it will continue to grow in the remaining 3 quarters. Like we said, last year it was approximately about 15 to 18% of our total sales. We are more likely to be around 25% of our total sales this year. That means that's a piece that's growing faster than the rest.
Okay. Okay, I have few more questions. I'll come back in the queue.
Thank you. The next question is from the line of Anurag Patil from Roha Asset Management. Please go ahead.
Thank you for the opportunity. Sir, what will be our total investment in road railer business till date?
About 60 crores.
60 crores.
Yes.
Okay. And secondly, sir, in the transmission business, are we expecting to break even in FY22 as a whole?
Like we said, we have made it into now an internal resource, largely meeting our requirement of the burgeoning air compressor business, which is a screw compressor needing gears, as well as a centrifugal. So we would have to look at it as a part of assets being used for the other business. But to answer a short question to your this thing, more or less it will no longer be a loss-making division, even if you have to look at it separately.
Okay, sir. That's it from my side. Thank you very much.
Thank you. The next question is from the line of Manish Goyal from Enam Holdings. Please go ahead.
Yeah, thank you so much. Sir, I have two questions. First, on defense-related sales, how do we see progress in near term and going forward? We are already executing a hydro-pneumatic system for battle tanks. So how is it progressing? That is the first question. And second question, broadly, as we aspire to have a 2,000 crores revenue in next 3 years. So how do we see the revenue mix at that point of time likely to be? And does it factor any inorganic opportunity? And also, like with new product launches, how do we see our addressable market growing, particularly with launches in screw compressors and launch of centrifugal compressors?
So I will take it one at a time. Defense business, I can only share the same angst as the Army chief's angst yesterday. It takes a lot of effort, a lot of patience, a lot of time, and it grows very slowly. So we are doing our best. In many of the products, we are a single supplier outside the government bodies, and we still have to fight a battle to get everything done. But it's a good business that we'll continue to be focused on. But it's not going to be a fast takeoff kind of a business. On the 2,000 crore breakup, it will broadly remain the same that I mentioned, roughly 40 to 45 on the gas systems, about 20 to 25 on the refrigeration, and about 20 to 25 on the air compressors, and all the rest at 5%. So this is not going to change much, because as we take up new projects and product, we are also looking at the spaces where we would take. We would look at the competition intensity, we would look at the margin opportunities, and we look at the capital intensity of these opportunities as well. So we are broadly staying with the same split. That is not going to change, and there is enough headroom for growth even with all this. Inorganic, we will look at inorganic, and this is something that it can only happen when it happens. We were prepared even for the last quarter in terms of Suhas did mention that we were keeping some amount of reserves available if opportunities were to come up. We are still prepared, but it's something that we will not be able to talk till it happens. The spaces that we look for are three things. We look for opportunities where we have a value chain advantage, which means we have to look at something which will fill into our basket of our current value chain, the products that we make. We will look at inorganic, which allows us a market opportunities, and we'll also look at inorganic where we get technology niches to take us into something which is a completely new space where we are not. So we are scanning opportunities, but we are not sort of giving out any kind of a buy mandate to anybody to hunt around. We are doing it in a as it happens basis. But what is our focus is really is on our internal processes and development, get our R&D design and team working on our new launches, which itself will take us to this 2,000 crore number quite comfortably.
Sure, sir. Just the point was that on addressable market currently, like in air compressors, we are addressing probably a very low region-wise, product-wise. So just wondering that if we are probably aiming to achieve 20-25%, which probably means 500 crores, which is in a segment which is quite competitive among the existing players. So I was just wondering that is it that we are looking the overall market also to grow very strongly, and then we're looking to get a very strong incremental market share going forward?
There are two things happening. The market is growing. Second is, if you look at the competitive space in the business that you talked of, there are only two players who have a comprehensive India-built product. And one of them operates on the principle of a cost pricing strategy, and we always operate on the principle of a complete solution strategy. So there are two very different outlooks to it. So we will pick opportunities which fits in our strategic positioning. The rest of them are players where they're a part of somebody else's global strategy. They do not do everything themselves. They get a lot of it from elsewhere. They are important big players, but that is where they are.
Sure, sir. Thank you so much. Thanks, sir.
Thank you. The next question is from the line of Kamlesh Kotak from Asian Market Securities. Please go ahead.
Thank you. Good evening, sir. I just wanted to understand your 1,000 crore plus order book breakup. How much of that would be between government and private sector?
That's a tough question, but I answer it like this. The breakup has actually become more favorable to private sector than government than it used to be earlier. We're getting more private orders than government orders.
Any ballpark range you can share, sir?
I would not do that, sir. For the good of the company and the margins, I think it's better to leave it there.
Sure. Okay. Secondly, sir, because of the input price pressure that is being seen, so will it be fixed price or the variable price contract? How you see they will play out in the context of the prices that have been spiraling across the commodities? So how that fixed price or variable, how it works?
Tender-based government tender orders and project orders are fixed price. That doesn't change. The good news is that we are also executing a lot of short cycle orders for equipment where we can change prices pretty quickly. And it is, like I said, private sector and others do be more responsive to our price increases. The other good news on the commodity cycle, like you all are tracking, copper, which is a surrogate for our motors and other things, future is stable at 9,300, 9,400 till end December. So the commodity price spiraling is now stabilized, yet at a higher level. So I think that has given us some respite in terms of having to continuously wanting to correct prices. So I think we are seeing a level of stability coming in as well.
Okay. And sir, just wanted to understand from the overall revenue standpoint, how much would be the after sales and the spares revenue of this, or all of this are products revenue?
Let me put it this way. It's a very important part of our business, the spares, service, and the ongoing support that we provide. It's approximately about 15%. We don't have to get deeper than that, but I would leave it approximately at about 15%.
Okay. And lastly, sir, just to understand the tracking of the demand side, what is it that we have to align it to correlate to? Is it the brownfield related capex or the greenfield projects that we have to track? How our demand shapes up from what kind of segments? Is it incremental capex? Just want to understand which is where the better way to track our business.
I think it's a tough one. I will put it this way. The gas business has to be tracked to the capex cycle of the gas industry.
Sure.
That's pretty obvious. For the next at least 3-4 years, that's what we track. The hydrocarbon, petrochemical, pharma are all lead indicators for tracking the air conditioning refrigeration business. The industrial activity overall is a tracking for the oxygen compressor, the air compressor business.
Mm-hmm. Right.
So generally, it's good to track the industry. IIP, the Index of Industrial Production, is a good index to track for the air compressor business.
Sure. Okay. Great, sir. Thank you very much. That's it.
Thank you.
Thank you. The next question is from the line of Sunil Shah from Turtle Star PMS. Please go ahead.
So I got the questions answered. Just one understanding that I would seek from you. So when we stated that we have a target of about 2,000 crores of revenue in the next 3 years, about 45% of that would be from the gas compressor business. Is that a rough estimation on the clear lines?
Yes, sir.
Yeah. So then that 900 crores we are talking about, it has the potential to become 6,000 crores once the entire rollout of city gas distribution is in place over the next 7 years. So that 900 can become 6,000 crores. Is this correct?
Assuming that nobody else supplies, because that's the total market.
Total. And when you stated the market space, you stated there is one more player from Pune.
Yes.
And together between the two, we have 80% market share?
Let me go through it calmly. 6,000
sure.
crores is the total size of the mother station and the daughter station market of the 9th and 10th gas announcement that has been made, city gas distribution announcement. Now that can happen over, government says 5 years, it can happen over 8 to 10 years. That's the total size of that market. So that is not going to happen every year. So it is over the, let's say, at least 8 years. So we talk of 6,000 crores being sold over 8 years. So that's the size per year you'll have to look at. And then that is shared between all the players in the market.
Right. And sir, on the competition, in terms of, you and one more company from Pune is what you stated. So between the two of you currently, as of now, the market share is about 80%. Is that the right understanding that I have?
That's right. Should be above 80%.
Above 80% between the two of you. Okay. Fine. Fair enough. Thanks, sir. Thanks for all these questions and the answers and the time. Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Dhirendra Tiwari from Antique Stock Broking Limited for closing comments.
Thank you, operator. Thank you, Mr. Srinivasan and Mr. Kirloskar, for giving us the opportunity to host the call. And you would like to add anything to have a final statement, sir?
We must thank you and the participants for joining in on this call. I know that we had a far more interesting competitive call going on from 4:30, which we too participated a bit. So thank you all for being here and listening to us.
Thank you very much. Now we can close the call. Thank you all the participants.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.